Hello everyone, welcome to our today's lesson. Today I would want us to look at advanced financial reporting, specifically the public sector financial reporting, IPSAS. And the one that I would want us to look at is IPSAS 18. IPSAS 18 segment reporting. IPSAS 18 segment reporting. Very good. Now, because this is a revision class, I would want us straight away to look at a question from our past papers. Or for those of you who have got these RCM books. To go right away with us to page number 205. Page number 205. Advanced Financial Reporting, IPSAS 18. Segmental reports. So the question is with us here. So we are told it's May 2015, May 2015, question number 4C. AFR May 2016, question number 4C. We are told the following information relates to the Ministry of Trade and Industry for the fiscal year 2013-2014. So they have given us the various departments: primary services, tertiary services, special services, other services. So for each of these departments, they have given us segmental revenues, where we have appropriations from our budgets, we have fees from external services, we have intersegmental transfers, we have segmental expenses, salaries, depreciation, and other expenses. Continuation, we are told there, other information, you can see they have given us segmental assets, segment assets. Then we have segment liabilities. Additional information, unallocated central expenses amounted to 70 billion. The common expenses, basically, the expenses perhaps attributable to the head office. Interest expense and interest revenue amounted to 20 billion and 40 billion respectively. Unallocated central assets and unallocated liabilities amounted to 350 billion and 400 billion respectively. They want us to do something very easy, required segment report consistent with the requirements of IPSAS 18, segment reporting for the Ministry of Trade and Industry to be included in the financial reports of the ministry. So right away, this is a straightforward question. So I will have here Ministry of Trade. Ministry of Trade. So we have Ministry of Trade. Segment. Reports or report here. For the period ending, they haven't given us a date, but we can talk over for the period ending, just like what they've given us, 2013-2014. Right, so we have our segments. We have what they are calling primary. We have the tertiary. We have the special. And then, of course, once I'm doing, or rather we have other departments there. When I'm doing these segment reports, I must come and introduce what we call the intersegments. intersegment, and then we have the total, like what we could call the head what here, the head office. Total, like what we could call the head office, like that. Very good. So we start posting straight away. Remember, segment report basically is like our general income statement, our general statement of financial position, right? So we start with the income statement bit, where we start with the revenue. So segment revenue, segment revenue. So under segment revenue, ladies and gentlemen, we have the appropriated revenues. So appropriations, what has been budgeted for each of the segments. Like now we have here from the question, I hope you CPA students have this question with you. Like for primary, I can see it had an appropriation of 480. We have 400. We have the special is 220. The other department, so we have in this case here 230. For appropriations, we don't have any intersegment. I'll be able to get the total here very fast. So we have here 480 plus 400 plus 220 plus 230 equals, which gives us 1330. So here we're basically looking at the consolidation, putting together the figures. Now, apart from the appropriations, what we were given in our budget here for each of the segments, we also had these segments doing some work to outsiders. So in that case here, they derived what we call fees, fees from external sources. Fees from external sources. Fees from external sources. So fees from external sources, if you have your question there, fees from external sources, what do we have? We have 50, we have 40, we have 20, we have 60. There is nothing like intersegmental. There's nothing like intersegmental there. So come and give us the consolidated one figure. I can see this is 90 plus 20 plus 60. So I can see straight away a figure of 170. Now from there, ladies and gentlemen, we have the intersegmental transfers. Intersegmental transfers. We can see that the primary department served, in this case here, gave services to the other departments to the tune of 100 billion. So we have here 60. We have 60 again. We have 70. We have 70. We have 70. We have 70. So I would want you to give me this total. So this total, what do we have? It's 100 plus 60 plus 60 plus 70, which gives me 200 what here? 90, which has to be factored in this intersegmental column, so that at the end of the day, the total in terms of consolidation here becomes what? Becomes zero. Becomes zero. So I would want you to come straight away here and give me my total revenues. Come and give us total revenues. Give us the total revenues. Give us the total revenues. So total revenues, what do we have here? We are adding column wise. So 480 plus 50 plus 100, which in this case here will give us 600 what here? 30. The second one, I can see it's 500 because it's 440 plus 60. So we have the next one, 220 plus 20 plus 60, giving us 300. Then we have 230 plus 60 plus 70, giving us 360. And then, of course, we have this intersegment giving us 200 and what here? 90. 290. 290 there. So please come and give us the consolidated total revenue. The total revenue here, it will be 630 plus 500 plus 300 plus 360 minus 290, which in this case I'm able to see a figure of 1500. And of course, if we are good students, we can see straight away that this will be able to match. If you take 1330 plus 170, we should be able to get 1500 there. So straight away, you can even take that opportunity to mark for yourself in an exam. You're correct. You're correct. So what am I doing? I'm trying to present what we call segmental information. Segmental information. Now, ladies and gentlemen, I've been able to get the total revenues for my segments. So the next thing that I would want you to do is to come and give us the total expenses. Total expenses, I can see the total expenses, I can see the segment expenses, they're straightforward. For primary, I can see 390, 90, and 120. You can decide to write each one of them individually, but personally I prefer combining them. So we have here the first one will be 390 plus 90 plus 120, which gives me 600. This gives me a figure of 600. It gives me a figure of 600. 600. So 600. The second one, in terms of total expense, we have 310 plus 70 plus 110, which gives us 490, which gives us 490. Please, if you have got questions, ask, put comments there. We shall be able to read them. We shall be able to read them and respond accordingly. So the next one, we have 130 plus 150 equals, which gives us 280. So we have here 280. 280. So the next one, for the other services, I can see 130 plus 70, 130 plus 70 plus 90, which gives me 200 and what here? 90. This gives us 290, like that, 290. Now, ladies and gentlemen, what I need to do is to come and subtract these total segmental expenses. We subtract the total segmental expenses. The total segmental expenses. Total segmental expenses for us to be able to get the segmental incomes. The segmental operating incomes. Operating incomes. So like the first one, I can see the income here is 30. 500 minus this gives me 10. Here we have 300 minus 280 giving us 20. Here we have 70. And then outrightly, ladies and gentlemen, we have a dash there. We have a dash there. So, and that is it. What you need to do is to come and give us the total operating segmental income. The total operating segmental income, what do we have? We have 30 plus 10 plus 20 plus 70, which gives me 100 what here? 30. 130. Now, ladies and gentlemen, the moment I have this operating income, now I need to ask myself, remember, operating income is similar to what you guys in the business world could have called EBIT, earnings before interest and what? Tax. Now, it is after getting this operating income that you shall come and give us the issues of interest. And for you to be able to capture the interest, please go to note number 2. Note number 2. Note number 2, you'll be able to see interest expense and the interest revenue amounted to 20 and 40 billion respectively. So we have, first of all, interest expense. So interest expense, of course, you can see it has not been allocated to an individual department. So this must be a group expense, the entire ministry. So the interest expense they've given us a figure of 20. It's something we're going to deduct. to deduct there. And then, of course, we have the interest revenue. Perhaps this ministry had invested some deposits, say, at Central Bank of Kenya, bought treasury bills, and they were able to get an income of 40, interest revenue. And then the other thing that I'm able to see is the unallocated central expense. It has to come here. Unallocated central expense. Unallocated central expense, ladies and gentlemen, of 70. This has to be in brackets like that. And that is it. The moment I do it that way, I will be able to get, in this case here, my net surplus or deficit. So we have the net surplus. So net surplus of 130 minus 20 plus 40 minus 70. What figure are we seeing there? It's 80. 80 positive, so it's a surplus like that. And that really marks the end of this particular, like what I could have called income statement in form of what here? Segments. In form of segments. Which now opens a door for us to think about the statement of what here? Financial position. Statement of financial position. Statement of financial position. Quite easy. So under statement of financial position, of course, we will not give it a heading. What we need to do is to look at the assets. Look at the assets. So mention there the segment assets. The segment assets. So the segment assets, are you able to see segment assets? Segment assets. There must be a note to that effect. You can see other information segment assets. So we have here segment assets. Segment assets. So segment assets, what do we have? We have 540 for primary. We have 500 for tertiary. We have 340 for special. And then the other is 300. Now for assets, what we need to ask ourselves, do we have any unallocated assets? Assets in this case that have not been put specifically for any of these departments. So in this case here, yes, if you look at note number 3, unallocated central assets, you can see unallocated central assets. So unallocated central assets, unallocated central assets, unallocated central assets. The central assets, we have a figure of 350. How about the total of this? Total of this, if you were to add everything there, we have 540 plus 500 plus 340 plus 300, giving us 1680. So in terms of assets, what do we have as a ministry? 1680 plus 350, which gives us 20 what year? 2030. 2030, and that is all as regards to what year? Assets. That is all as regards to assets. So come and give us the liabilities section, which is the last section, the liabilities section. So please try to see here the segment liabilities. Segment liabilities have been given. Segment liabilities have been given. Mine is to just pick them. So the liabilities here, we have 250, we have 150, we have 80, we have 110 like that. So of course nothing intersegmental there. So we have here 250 plus 150 plus 80 plus 110, giving us 590. And then of course there could be other liabilities which cannot be apportioned quite easily to the various sectors. We normally call them central. So look for the central liabilities. So the central liabilities, what have they told us? They have given us in note number 3. Note number 3, unallocated liabilities are 400 billion. Unallocated liabilities are 400 billion. So come and give us the total liabilities. The total liabilities. So we have this will be 900 what year? 90. Now, ladies and gentlemen, the moment I have this particular information displayed in form of segments, it becomes very easy for me to be able to derive some conclusions in terms of performance of each of these segments. Like now, by just a look of things, I'm able to see the worst performing segment in terms of operating income. I'm able to see the best performing segment in terms of operating income. I'm able to see this in a pictorial view. So that is the end for today. Please, for more information, try to look for these particular books, RCM, which you can get from RCM Standard Bank House, RCM College Standard Bank House. Go for these books. And if you need to get specialized attention in form of online classes, which we really recommend, please don't hesitate to get in touch with Afri School. Afri School. Afri School, once you pay fees to them of 3,500, you'll be able to get videos which are pre-recorded, which you'll be able to watch offline. You'll be able to watch them offline without any internet connectivity. The other good thing, once you join Afri School, you also get what we call the smart notes, which are quite summarized, quite precise, which are of course very good for students who are nearing the exams and they haven't begun studying. We also have very interactive live classes. If you join us, you'll be able to get that particular forum where you'll be able to ask questions directly. You engage with the lecturer and the other students in a way that really you cannot experience that in any other platform. It's Afri School. Please register with us and make our program popular by sharing our videos online. Talk about us. Thank you very much.